Hey guys, good morning, good afternoon, good evening, good night, wherever you are, whenever you are. Welcome to a new Breakout Solutions Bitcoin Technical Analysis live stream. I'm your host, Matthew Batiri, and welcome to a brand new week. Well, I've got some really exciting stuff to show you today. I'm going to be talking about the bullish case with Bitcoin because I've got a firm belief that we're going to go up from here. And now, obviously, I can be wrong, but I'm going to put my foot down and talk you through exactly what I'm looking at, why I think that we're going to be going up to, the mid 30s from here and not go down, not break down and complete this head and shoulders pattern. So we are watching things on the weekly time frame right now. I will quickly talk about a couple of things that I can see with my indicators, which is giving me this bullish bias. Even though I think most people are probably split 50-50 down the line if they're bullish or bearish right now. Yes, I'm just putting myself out there thinking that we are going to go up from here. I can, of course, be wrong, but sometimes you've just got to put your money where your mouth is. Now, on the MACD, it does look bearish. We can see the moving averages are looking to cross over, but this can happen multiple times where we do come down to cross and then we have a push to the upside. Let me see if I can find a similar time where we've sort of done that in the history of Bitcoin. I do have to kind of zoom in to this amazing indicator that is the MACD. So let me just quickly minimize these other indicators. Nope, not that one. Where is it? There we go. Okay, so I'm just going to make the MACD a little bit bigger. So it has been a little while since Bitcoin has done that, but here's a prime example of where what can happen. So where we get clear indication that Bitcoin is going to start trending downwards, where the moving averages have crossed over. We've completed the histogram pattern where we have the green candles going to the light green candles and then forming a red candle. So I do suspect something like this can occur, where we basically fake the sell-off and then we push to the upside. So this is why I'm not a huge fan of you always using the MACD. It's more for something on the macro scale. But with the moving averages still, distance apart, we can sort of just have a bit of a fake out where the lines never cross, and then we just continue in the upward direction. So that's what I'm looking at on the MACD. That gives me the bullish bias. The next thing is stochastic, the normal RSI. Now, we haven't really developed a bearish divergence, meaning that I would like to still see a higher high in price from this peak. Okay, so that would mean this peak here lines up with the next peak, and I expect the next rally to bring the stochastic, oops, not that high because it's going to be bearish. Excuse me. Bearish divergence, that's what I'm looking for. I'm drawing some incorrect lines. I expect the next pump to create a lower high to this, and this would give us a bearish divergence on the weekly. So I expect, prices around about 35 grand, and then we're going to have a slow retrace and pullback before the halving, well, for the rest of the year, before we have the halving in April. But usually the market starts the bull market about 3 to 6 months before the next halving. So if the halving is in April, so let's do a bit of a back test. Yeah, I'm pretty sure the time frame is like April 17th or something, 2024. So if we go April, we'll just do that, April 15th. Oops, I grabbed my wrong line. Where's my vertical? There we go. April 15th. Okay, so that's where the halving is. If we backdate, 3 months, let's go 3 months, we'll go conservative. So that's 90 days. So we're looking at, the start of next year, the bull market starting, or possibly even earlier, which would be 180 days, which would be about October at the end of this year. So that's what I'm kind of looking at. So if I was to draw out sort of the price action, as I said, I think we have one last pump left in us, and then we kind of just retrace all the way down to about October there, and then we start our slow rise to the halving. Bit of a dump after the halving, it always occurs, and then the exponential growth, something like that. That's kind of what I'm looking at in the price. So over the next month or 6 weeks, I do expect a bullish June, personal bias. And let's keep going. Let's keep going. Why I believe we still have higher prices to go. I'm going to show you the stochastic RSI. So the stochastic RSI is an oscillator. You can see that the waves go up and down, up and down, up and down. And if you are a macro trader, I've done this before multiple times. If you sell when the indicator is in the overbought territory and the moving averages is crossed over, always a good time to sell. Okay, we'll just do a couple of quick lines just to show you. That one was just on the 80%, but that's fine. So you can see every time we're in the overbought territory and the moving averages cross over, that initiates a sell-off. Okay, so here's prime example, right? Now, we printed a new week, and these moving averages have continued going down, but I believe we're coming close to an exhaustion in this sell-off. So I do expect probably maybe another week or two of just really boring price action in this range, allowing the moving averages to come back down a little bit further, and then we'll see a reversal. So if I am incorrect and we don't go up from here, I don't believe we have much more downside to go. That is a good thing, because you can see the stochastic RSI coming close to the oversold territory, which is right here. And so I expect the bullish momentum to continue in at least 2 weeks. Now, last indicator on the weekly, even though we have entered the, we've started getting assets coming out of, we're having, so this is a money flow indicator. Okay, this is where you got green wave, red wave, green wave. So we did pop into the green for a little bit, but now the red wave seems like it's coming in sharply. But what I do believe is we're going to form a very small red wave, like so, and we're going to get a bit of a bullish divergence right here. We're going to have, basically a little bit of a anchor trigger wave on the market cipher, and that's how you use it. Anchor and trigger waves. Anchor waves are the big waves. The smaller waves after the anchor waves are called trigger waves. So I do think that we're going to form a little bit of a trigger wave on the money wave, on the red money flow, and that should push us to the upside. The VWAP, which is the yellow wave that you also see on market cipher here, seems to be flattening out. Now, you can see that the angle, if I do zoom in, the angle is still pointing down, but I do think that next week we could get this, where the line flattens, which means that also is a very similar indicator to the money flow and these waves, that once we flatten out, we're kind of finding a bit of a bottom, and we should see a reversal. On top of that, normal stonks are doing quite well. So even though we have seen a bit of a change in, we haven't had positive correlation as of yet, because we can clearly see that the stock market is trying to make higher highs from this local price action. If stocks go up, I would assume that Bitcoin would also probably go up with the stocks, because it is an investment at the end of the day. And, people are looking at these, these two asset classes sort of, having some correlation. All right, so we've looked at things on the weekly. Now, on the daily, once again, we are a little bit bearish. We have entered the red money flow, so I am cautiously optimistic that we are going to 35K. But like I said, I'm putting my foot in the sand, or drawing a line in the sand and saying that we're going up. If I go to the other indicators, so we can see stochastic RSI is moving to the upside on the daily, okay, which is good. On the 2-day, we have a bearish cross here, but I think we might get a bit of a false signal, or worst case, we might have a quick dump to 25K and then move to the upside. The bearish case that I have on the price action, okay, if it was to occur, would probably be the 786. So $22,000 of Bitcoin right here. So any type of flash crash to the golden pocket or the 786 also is a possibility. But I am hoping that from here, this is the last of the sell-off. If I go to the 3-day, what I like about the 3-day if I take on if I turn on market cipher as well. So when we are in green money flow in the high time frames and we get a anchor or trigger wave, so anchor wave or trigger wave that produces a green dot, this normally means that we get very explosive price action to the upside. Now this anchor wave has not yet really formed. It's still kind of curving out, but if in maybe not 3 days time, but let's say 6 days time, because this is the 3-day time frame, we do get that green dot and we remain in the green money flow, this is where I think we are going to get explosive price action. This will give the weekly stochastic RSI time to go into the oversold territory, start curving up like what I showed at the start of this session. We can see the 2-day also very close to printing a green dot, and this is actually going to give us a hidden bullish divergence. Okay, so we have a higher high in price. This is if price doesn't change, and we have a lower high on the momentum wave. Let me quickly just check the normal RSI. So the normal RSI, we don't have a hidden bullish divergence yet. We would need the RSI to come below this point right here. Yep, or this point right here, correct? And create a hidden bullish divergence. So we haven't got confirmation of that, but we do have a hidden bullish divergence on the market cipher if it does occur. And we also could possibly get a hidden bullish divergence on the stochastic, but you'd have to probably zoom in to see this divergence. I would have to put it exactly at that crossover and exactly at that crossover. No hidden bullish divergence. But if this does come down lower, we could possibly get a bullish divergence as well. All right, we've got a comment. Let me just quickly check out what the comment is. Nope, no comment. It's a false alarm. Alrighty. Now, let's go into the shorter time frames. So we're going to go to the 4-hour now. Now, the 4-hour, a lot of people, especially other YouTube TA analysts, are probably looking at the same thing, right? We've got this flag. Now, this could obviously become a bear flag, right? Sorry, or bear pennant. This is a pennant, not a flag. So this is the, you can either draw the flagpole from the top here, or even this one, because this is quite local as well. And we can measure out where is that going to take us. If we break down from here, we're looking at 24,400. If we take worst case scenario, we're probably looking at 23,000, right? Very close to that 22,000 worst case scenario that I've already pointed out. So it is important to understand what the bearish factors are. What is the invalidation to this this bear pennant? So basically what I'm looking at is a daily close below 26,400. That'll make me bearish. I will probably enter a short then. It'll be a breakout trade and write it down to 25 or 22,000. Or if this becomes a reversal, then obviously I do think we're going to push to the upside. So what we need to look at is we need to keep an eye on this flag. We may get a fake out either way. So we could have something that comes down. This morning we had a bit of a fake out. See how the price action came down below the trend line. So we can get a fake out to the downside and then pop to the upside. Or we can get a fake out to the upside and then break to the downside. These are two possibilities. So what is the best option if you are watching this and you want to trade this? Well, basically, you want to wait till the price breaks to the upside or the downside. So if it breaks down, we want a bearish retest of the trend line. Okay. If we break to the upside, we want a bullish retrace and bounce off the trend line. That's what we'd be looking for if obviously either case plays out. If we break to the upside, we have a fake out and we break back down, then we're going to going downtown, and vice versa. If we break down, come back up, we don't get rejected, but we actually blast through. That's those are the things. So we need to look at, don't FOMO into any longs or shorts. Just wait for the retest of the trend lines. If you happen to miss it, then what you could look for a reaction from the point of control. So we may get a pullback from here. That will give you an opportunity to obviously get back into the market, or another reaction at the value area high. Now, why I'm, like I said, optimistically bullish and not bearish is I can see the money flow on the 4-hour. Let's have a zoom in the money flow. Okay, so money flow increasing on the 4-hour. We're about to create a trigger wave right here. Does it line up as a bullish div? Yep, it does. Let's line it up. Perfect. Okay. Oh, no, it doesn't. No, it doesn't. No, it doesn't. So this would be right here. We would need the wave, this trigger wave. We need that this green dot to be lower than this dot. And I don't think we'll get it. I think it'll be a little bit higher. So we're not going to have a bullish div on that. You can see we've got a couple of hidden bearish divs and bullish divs just on the normal RSI. If you want to check it out, check out Divergence Indicator. It's a free indicator. I like using it. It's very simple. Basically, when you see bear or hidden bear divergence play out, okay, and it tells you short the market or sell. If you get a bullish divergence, this is a regular bullish divergence, obviously long the market, etc., etc. But what I like about this, like I said before, money flow moving to the upside. We're about to get a little trigger wave right here, which then gives us this really nice bullish divergences. And this lines up, because it's a lower time frame, this lines up with the daily the daily reversal, the daily stochastic RSI moving to the upside, the 2-day looking to obviously turn up. Did we look at the 3-day RSI? Look at that, 3-day stochastic RSI in the oversold territory. Now, it doesn't mean that because this is here and as it goes up, price goes up, but there is a good correlation. It's about a 75% hit rate when we are oversold or overbought. If the price action has been going down, which it has been right now, I expect a reversal. If price was going up and we were down here, if we were, let me rephrase that. Because we've been selling off and the indicator is quite low, this is why I expect a change in price action. If it was the opposite, where we're hanging out down here and we've moved to the upside, I would expect the exact opposite. So right now, the daily stochastic pointing to the upside. Double confirmation. Come on. It's not loading. Why isn't it loading? There we go. Stochastic pointing up. 2-day looking like it has crossed over. It's crossed over bullish, but it has not yet crossed over bearish. If I zoom in, you can see the two lines, the blue moving average is pointing down. Looks like it wants to, do that and cut in, but we could have a very similar fake out like here. So let's quickly point this out, because this was obviously a fake out right here. So we'll see what the price action did right here. Okay. So look at here, price action on that day, we were quite low already. That was around the 5,000. That was actually the bottom, believe it or not. So the stochastic RSI had a bearish cross and then it regained the bullish cross. And then obviously we moved to the upside. So we could do something like that on the 2-day. And this is why I think we're going to move to the upside. 3-day stochastic RSI down. We just went over that. 5-day also pretty much all the way down. We're in the oversold territory right now. So it's not long till these two moving averages. It says exactly 3 days and 17 hours till these moving averages move on to the next sector. And that would be basically, I would assume this will go like that, or we'll get a straight pump and then these two moving averages will cross over like so. So this is why I'm bullish. I know most people are saying, oh, we're bearish, but I'm just taking an absolute punt here. A well-educated punt with the indicators that I use. So like I said, it looks like we could even stay in this consolidation for a little bit longer, really tighten it up, because if we look at the Bollinger Bands, let me quickly turn on the Bollinger Bands. We know a big move is coming. We know a big move is coming. All right, look at the Bollinger Bands. This is only on the 1 hour. Let's go to the 4 hour. Okay, the 4 hour Bollinger Bands are very tight. It gets tighter as we go down the or go up in price. You could look at the 8 hour. Look at the 8 hour. So tight. Let's go to the daily. The daily still not too bad, right? We can see that the upper side of the band is at 29,200. The lower side of the band is in line with the low that we made on the 12th of March. So we're not getting a very big constriction like what we are here. But doesn't mean it's not, we're not going to see some, some very big price action. We are looking for a big move. It's either going to be a big move to the downside or a big move to the upside, but a big move is coming because we've kind of just been trending lower and lower as of late. Now, the other thing to quickly look at is we're in this downward, trending pattern. Now you could probably draw a couple of lines. I think I did see someone drawing a wedge, so you can go from the candle closes, something like that. So you can see we've got a descending wedge. Now that's usually a bullish pattern, but look, at the end of the day, I'm bullish. So yes, anything that adds confirmation to what I'm saying, then I'm happy to look at. But like any reasonable trader, you need to know, you need to use your indicators to give you a bullish bias or a bearish bias. Right now, my indicators are giving me a bullish bias, and there is obviously some bearish things on the chart. But right now, I feel like if we were going to complete this head and shoulders pattern that everyone is talking about. Okay, this is the neckline. We have the left shoulder, we have the head, and then we have the right shoulder. Normally, when we break down from these patterns and we have the bearish retest, which we've already had, we'll then dump down. But we have not yet dumped down. We've created this bearish pennant, but this bearish pennant may be part of the 30% of bearish pennants that do not continue to break down to the downside. I do believe we're going to move to the upside from here. So, as I said, another thing you could actually look at this, pattern. If you're, into patterns, if you're a pattern trader, I'm not a huge pattern trader, to be honest. I look more at better technicals than just pattern trading. You can say that this is a bit of a diamond pattern, I guess, in a way, right? Which is a reversal pattern. Okay, a diamond pattern is usually a reversal pattern. So most people that are bullish are probably looking at the different patterns, but it's not a perfect diamond pattern, but those usually are reversals. Alrighty, guys, I've just told you why I think Bitcoin is going to 35K before it's going to 25K or 22K, but that's just me. I could be wrong. I actually personally hope that I'm wrong. I would love a second opportunity to buy some more Bitcoin at 22K, because if whatever we come down to, it's very improbable that we will come back to those prices either anytime soon or ever. I'm going to do a quick hypothetical. If we do, let's say, go to 35K, which is my probably main target, okay? If I was to draw a Fibonacci retracement from 35K, the golden pocket is around 22,000, 23,000, right? So if over the course of the next 6 months, once we hit this, we have this really slow downward trend till we get to the halving, and then we see the reversal. The golden pocket is, probably the worst case scenario that I foresee Bitcoin going down to. So, which is about the same price that I foresee as the worst case scenario right now, which, I mentioned, which is a fib retracement from this point here to here, and the 786 and the golden pocket of the larger trend also line up. So there's a bit of confluence right here. But as I said, I'm just bullishly biased right now. Okay, guys, thank you so much for watching. We've been over 24 minutes. Hopefully, you guys can clearly see what I'm looking at in the charts. If you think that we are more bearish than bullish, please leave me a comment in the comment section below. Tell me why. I'll have a look at exactly what you're looking at, and we can go from there. Before I let you go, I'd like to let you know that if you weren't around last week, you probably missed our Hidden Gems webinar. And if you haven't seen it yet, let me quickly get you the replay page. So all you need to do is you can go to breakoutnow.co/hidden-gems-event. We'll just obviously grab your first name, last name, phone number, and email. That will give you access to the replay page, which looks like, let me bring the replay page up. There we go. This is the replay page. It is a 2-hour webinar, but the good thing is by not watching it live, you can now use the little dongle at 2x speed. And if you enjoy what you hear us speak about, you can feel free to book in a discovery call with myself to talk about what you saw in the webinar, which is absolutely, it was awesome stuff. I learned some new stuff from Michael, the presenter, who's my boss, of course. I'm always learning, which is great, but he presented some really good strategies for you guys on how you can find hidden gems using the support acronym. So make sure you do check that out. Guys, that's all I wanted to cover today. So thank you if you stayed all the way here. Oh, one last thing, just to show you how good the webinar is. Even BitBoy Crypto is talking about our webinar. Look at this. BitBoy Crypto, hidden gems, hidden crypto gems. Okay, he said missing this is like missing Bitcoin in 2010. I totally agree. So if you don't want to miss out on the hidden gems webinar, make sure you check it out, breakoutnow.co/hidden-gems-event. And you too can be a raving fan like my man, BitBoy Crypto. That's it from me. Thank you for watching, and I'll catch you on Wednesday for our altcoin research. Bye for now.